All right, today we're going to walk through something really interesting. It's a live case study of a market cycle for copper, and we're going to look at it through the lens of a proprietary system called market DNA. Let's jump in and see how it unfolds.
So at its core, market DNA is a geometric system. You can think of it as a way to map out market movements using very distinct phases. In this explainer, we're going to track one of these cycles, literally from its very beginning. We'll follow it all the way to its current state. This gives us a pretty unique, real-time look at how this model actually works.
So here's what we've got on tap. We'll start with a quick look at the cycle itself. Then we're going to break down each phase one by one, from the initial setup to mirror contact to where the market is right now. And we'll finish things off with some really important disclaimers.
Okay, let's dive right in. We're focusing on this one specific market cycle for copper. Our whole goal here is just to document its journey through the phases that are defined by the market DNA model.
And I want to be super clear about this. This isn't looking back at old data. We are documenting a cycle that is happening right now. All the information you're about to see is current as of February 24th, 2026.
So everything starts with Phase 1, the setup. This all got started back on February 17th, and this is the moment where the entire roadmap for the cycle was first established. Okay, so take a look at this chart. This is our starting point. You can see the model identified a primary entry level, right there at M, which is where the price was. It also flagged a potential second entry down at PC. Now these points and the geometric shapes you see, they create the entire map for this cycle.
Let's put some hard numbers on that map. The primary entry was set at 5.6613. The secondary was just a bit lower, at 5.418. Now, a really key element here is something called the trapezoid. It projects a potential time window for this cycle of about 20 days, and the overall calculated risk domain is just under 21%.
Now what's really cool is that every setup comes with a risk plan baked right in. So let's say we're working with a hypothetical $100,000 account, and we decide we can't risk more than 5%. Well, the model then calculates a total position size of 0.43. And to manage the risk of entry, it suggests splitting that into two smaller trades of 0.21 each.
And this just highlights how systematic that risk calculation really is. The source material actually has a mandatory sentence to describe this process, and it goes like this. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size.
So what's the goal here? The setup laid out three key price targets, T1, T2, and T3. You'll see that T2 lines up perfectly with a point called apex N. Now, let's imagine a scenario where both of those entry levels get hit and then the price reaches T2 within that 20-day time frame. Well, in that case, the model projects a potential annualized return of over 37%.
All right, a few days go by, and that brings us to the next key event in the sequence. This happened on February 21st. The model calls this Phase 2 mirror contact.
And here's exactly what happened. You can see the price moved up, and boom, it made contact with the mirror delay line. That happened at a price of 58712. And what's really interesting is that this contact happens right on the time boundary of that trapezoid we saw earlier. It's a key intersection on the model's map.
So what does this mean for the position? Well, that first trade we talked about, the one from the M level, that's open and active. But because the price just went straight up without pulling back, that secondary entry at PC was never actually triggered. So this means only half of the planned position is actually in the market.
So this brings up the big question, right? Within the model's framework, what happens next? Is the market about to shift into Phase 3? Let's see.
And the answer is, yes, it was. The cycle has now officially entered Phase 3, which is called reaching apex N. And this is the very latest development. It brings us right up to the present moment, February 24th. Check this out. As you can see on the chart, the price just kept climbing. It hit 595.66, and that number is a big deal. Why? Because that is the exact level the model identified as apex N. And if that sounds familiar, it should. That was our T2 price target right from the get-go back in Phase 1.
You know, hitting this target is a major milestone in this system. With the price reaching apex N, Phase 3 of this particular market DNA cycle is now considered complete. So with Phase 3 in the bag, the next logical question is, what about Phase 4? Will the cycle keep going and eventually reach the top of that trapezoid? Well, for now, the model is just observing, tracking the price to see what happens next.
Okay, so let's do a quick recap of where we are right this second.
The bottom line is, this copper cycle is still live. It's not over yet.
It has successfully moved through the first 3 documented phases, and according to the model's map, the next potential milestone on the horizon is the completion of Phase 4.
Okay, before we wrap up, we absolutely have to go over some very important disclaimers. So please, listen closely to these next few points. First and foremost, this is not financial advice. These analyses are created for documentation and public verification purposes only. It's also crucial that any risk management follows the user's own specific instructions. Within this model, any leverage above 10 is strictly prohibited, and please never ever invest essential personal funds.
And there you have it. That's our documentary walkthrough of this market DNA copper cycle. For more case studies, more documentation on this proprietary system, you can head over to the website you see on your screen. Thanks for watching.